Another wild ride on Wall Street. Stocks sank to their lowest levels of the year Tuesday, sending the Dow Industrials below 10,000 before recovering with only modest losses.
You could say at this point it's really just sort of a technical reversal, and the real question will be how long will it last? Do we just go back up to about the 1150 level or so on the S&P 500 and then turn down once again? Or in this meantime, if Europe does start to sound as if they are getting their act together, maybe we end up emerging safely from this correction.
The Dow had spent much of the day off more than 100 points on fears the European debt crisis could have an impact on the economic recovery in the United States.
We export about a quarter of all exports to Europe. So if they slow down dramatically, well then yes, that will crimp our export abilities, and that could have a slight impact on our overall GDP growth.
The stock market had turned so pessimistic in recent weeks that it didn't take much to send the market several hundred points lower. But with that level of volatility, some analysts say it could be a good time for investors to jump in.
I think certainly if we do get through this correction unscathed, it will end up being a nice buying opportunity. Traditionally, we have had, since World War II, 54 times that the market declined between 5 and 10%, and 17 times that the market declined by 10 to 20%. And yeah, they represented very nice buying opportunities.
The Dow ended the day down just 23 points. The turnaround came as bank stocks rallied in response to comments by Congressman Barney Frank. He indicated that Congress may pass a more mild version of the financial overhaul bill lawmakers are now hammering out. Mark Hamrick, The Associated Press.